Hello and welcome to your Daily 5 for the 24th of March. My name is Julius de Kempenaer. I'm presenting to you from Amsterdam in the Netherlands, and I am your host for today's episode of your Daily 5. I'm a senior analyst here at StockCharts.com and the creator of relative rotation graphs. And of course, they play a crucial part in my process to pick 5 interesting names for you. You can find my contributions in the RRG blog on the site, as well as on StockCharts television, where I host Sector Spotlight every Tuesday from 10:30 to 11 a.m. Eastern. For today, I want to focus on the materials sector. And those of you who have seen me before, either on Sector Spotlight or here on Your Daily 5, know that I usually start at the sector level, and that's what we're going to do today again. Left-hand side, you see the RRG, the weekly RRG for the 11 S&P sectors. And as has been the case for the last few weeks, maybe even months, is that the tail for the energy sector, XLE, is kind of distorting the picture because it is so far out, so far pushed out into the leading quadrant that it is actually pushing, compressing rotation of all the other sectors. So I'm going to tick that sector off and then fit the whole image again, and then we get a better angle of what's going on. Now the materials sector, XLB, is inside the leading quadrant, moving higher on the RS ratio scale, which is good, and sort of stable on the momentum axis. If we highlight the tail here and let's zoom in a little bit so it becomes more clear, you can see that we are generally moving to the right, slightly up. That's a good position to start with. From a sector rotation point of view, putting it on a sector rotation model, it's also in good shape, that XLB sector. We're going to talk about that in one of the future episodes of Sector Spotlight. But for now, we're going to stick with XLB. And I'm going to put it, I'm going to look at all the individual names inside the XLB sector. And if we look at the RRG now, this holds all the individual names that make up the materials sector. Then you can see that there is actually quite a good split, or a clear split, between two groups of stocks. You got the whole group inside the leading quadrant, all the greens, and then the big group inside the red, all the laggings, and then there's only a handful that are either inside improving or inside weakening. And especially the ones in weakening are heading southwest, which is not what we like. And then we've got IP inside improving, that's rolling over, and WRK is also a bit rolling over. So what I did is I actually went over all these individual names and toggled over all of them, and I selected a few tails that I thought were worth looking at, and I've highlighted them in this RRG. So these are the names that had my interest from toggling over all the individual tails and moving from here to the individual stock charts. And I've actually written an article last week on the materials sector, and one of the stocks that was in there is CE, Celanese Corp. And it's one of the stocks that I think that you should not own, because you know that I feel that it is also very important, next to know what you should be buying, it's also very important to know what you should not be buying or what you should be avoiding. And I think that inside the materials sector, CE is one of the stocks that is better avoided. If you look at the relative chart, that's the reason why CE is actually pointing deeper into the lagging quadrant, is because we had this sideways move in terms of relative strength, followed by a break lower, and that is followed by the RRG lines that started to move lower already back at the end of last year with a little hiccup and then the break. So CE is actually pushing further into the lagging quadrant, and that is backed up by a break from a big top formation on the price chart, where we now see a nice pullback to the former breakout level. So this is a crucial level. As long as CE remains below 145, I think that it is a good opportunity to say goodbye, and I think that CE will have another leg lower, potentially targeting the area between 120 and 125. If we move on to the next one, that's PPG, that's also one of the stocks that's inside the lagging quadrant, actually with a quite long tail pushing further into it. And we'll see kind of a similar pattern to what we saw in CE. Big break from a top formation, pull back to the breakout level where we're now seem to be failing around 130, and that very clear break in terms of relative strength. So from a relative point of view, PPG Industries is in a relative downtrend, makes it not attractive to be invested in. And from a price perspective, this is now a new downtrend, and the lag down that we saw from over 175 to 115 is retracing a little bit, but you can see that it's already running into trouble around 130. The market is really strong. We could see 140, but that major series of lower highs and lower lows is in place. Combine that with the very weak relative strength, and I think it's a stock that's better avoided. A different story we find with PKG. PKG has moved into the leading quadrant quite a while ago. It leveled off in terms of momentum, relative momentum, so it's now more moving sideways. But if you look at the price chart, you see that we're just breaking out of that massive consolidation that played a role in 2021. And we're now pulling back towards the breakout level. So it's quite the opposite of what we saw with CE and PPG. PKG broke out, is pulling back with strong relative strength, backing it up. So as long as PKG remains, let's say, above 150 and puts in a new low, it could be setting up for a new move higher. The next one is Nucor Corp. A very interesting tail, very long tail, very strong tail, and a very nice breakout, very strong relative strength. And it looks pretty strong here, but I decided not to include it as a pick because I think that this one has moved a little bit too far ahead, so the risk is increasing. I'd like to pick them up just after the break. And when I look at FCX, despite the fact that the tail has rolled over a little bit, I'm going to give it the benefit of the doubt because the loss of momentum comes after a nice break in terms of relative strength. But if you look at the break in terms of price, we basically have just begun. And it has a little bit of room to pull back and move higher, but the downside risk is very limited with the upside potential definitely there. So FCX is my pick for your daily 5. And then the next one, the last one here, is NEM. I'll put that in the tail there, and you see that is solidly inside the leading quadrant, moving further to the right, and a very clear break from this massive, it's almost 2 years, consolidation area between 52 and 72. I know it's a massive range, but when you break out of a massive range, you usually get a massive move. Combine that with the big turnaround after a 2-year declining relative strength, I think that Newmont Corporation is setting up for a nice move higher, together with together with FCX and PKG on the long side, and we have CE and PPG on the short side for this sector. And that concludes your Daily 5 for today. Thank you for watching, and I hope to see you again at a future episode of your Daily 5 very soon.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.